G'day, this is Jason here from Forex Snagger 2.0, and today is October the 12th, 2017. Okay, well, the markets have been a little interesting lately. Some pairs have chopped and chopped and chopped and chopped. Not good. The reason was FOMC. That happened yesterday. That was a good reason why, and for whatever other reason, it's just chopping lately. It's like nobody's trading the market. They're all sitting, waiting, sitting on their hands, sitting on the bench, sitting on the sidelines, whatever the hell they're doing, I don't know. But they're not really trading. So let's take a look. Let's get into this now. We'll take a look at the pound yen on the 15-minute time frame. Okay, so let's take off that auto scroll and we'll go back to where we left off. But just here, look at this chop. Not good. And that was on the 10th. Okay, that was on Tuesday. So then we came into Wednesday here. This whole day was a write-off, as you can see. Did the one trade and it went nowhere, and then it went the other side. Now, on this day, what we were looking for was a break and close below there. And that's what it did right there on that candle. Came back up. You would have sold it right there. Stop was 28 pips. You definitely got your 1-to-1. There was 46 pips potential. Then, on the FOMC, or no, this was not the FOMC. This was the FOMC. Right here. You got to buy right here. You know, it didn't go up too much. 20 pips. You could have bought it here. And if you held it, it was like a 50 pip stop, and it hit your 50 pips right there. If you held it a little longer, well, it went another 22 pips. And then today's trade was very, very easy to see, as you can see. Very easy. Draw your line right there for your support. It breaks down through it, comes back up, creates the gap right there. You would have sold it right there. Your stop is 30 pips. You hit your 30 pips right there. Your 1-to-1 win-loss ratio is 60 pips. It's 2-to-1, 90 pips, 3-to-1, 120 pips, 4-to-1, and 100, almost 150 for 5-to-1. Not that I'm saying you only got 5-to-1 win-loss ratio on this trade, but you definitely had 147 pips potential to make on that trade. You know, because every trader is different. Some traders would have got out here. Some would have held on and said, look, she's going to go maybe down to here. They would have got out there. Some would have held on even more and said, maybe it'll go more. They would have got out here. Everybody gets out in different places. But if you read my manual, it tells you how, and you use the stop loss manager, you know, it tells you to go for 1-to-1. This mainly works about 80% of the time, 1-to-1, okay? It works a little less on 2-to-1. 3-to-1, I don't even know the odds. But that's how you use it. If you go by the rules in the manual, it tells you exactly where to put your stop, how to calculate your take profit, and that's it. So anyway, there's some pips to be made here today, and here, and here. Winner, 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 chicken dinner. Okay, let's move on. Looking at the pound now. So as you can see, the pound was more choppier than the pound yen. It was choppy because of the fact of the FOMC. And that was this candle right here, 2100. It didn't do very much. It went up 18 pips and came back down again. But anyway, you know, I tell people in my manual, don't trade The day before a big news event, like FOMC or the non-farm payroll, I tell them don't trade the day before or the day of the event. Because anything and everything can happen, and it usually does, twice. So that's why I say don't trade. And look what happened. If you tried to trade this, you would have got chopped up. Okay? And then today, it gave this beautiful trade, just like on the pound yen. This is what made the pound yen drop like a rock. It was the pound. So anyway, you would have got in short right here, and your pips potential was 125 pips. Let's take a look at the yen now. Oh, chop, chop, lop, lop, lop. Chop, chop, lollipop. God. Okay, this is where we left off. So you can see you did this trade here. You got in here somewhere you got in here, wherever you got in. It went down 42 pips, and you had your 1-to-1 win-loss ratio. If you decided to go long here, okay, went up 16 pips. Your stop was 30. Didn't even get your 30 over here. And it crossed down before it could go up, so you would have got out right here with maybe two pips profit if you would have got out by my rules. Okay, you definitely would have done this trade too because it broke through the madness. The madness is the resistance right here. Pierced through it nicely, came back down. You would have bought it right here. You would have got out right here with a 7-pip loss. Okay, so that was your trade of the day. Usually I say if you lose one, you do one more trying to make back what you lost. You're okay, but if you do one and you win, you stop. One and done, one with a loss, you try and do a second trade. That's my rules in my pip snagger. So anyway, you get in right here, and you got 20 pips. So you could have got back your loss, but it's still not very good. And then today, we told you to sell. Excuse me, yawning here. I thought I slept good last night. You would have got in right here. This candle broke through the support. You would have got in short right here. Went down 20 pips. Big deal. You would have got your 1-to-1 right there, 16 pips. Okay, and now we flipped up and we flipped down and now we flipped up again. Aren't they just wonderful when they do this crap? Yeah. Oh, the market's so manipulated, ladies and gentlemen. So manipulated. How can you trade that? Oh, you got to trade it like on a 5-minute chart, maybe. Yeah, if you could. Okay, went up 12 pips. So we want to trade that for 12 pips? I don't think so. There's 10 pips. There's another 10, 12 pips. Yeah. You can't trade that. This isn't 2008, 2006 where you could trade the 5-minute. If anything, in the U.S. session, you might want to look at the 1 minute. Okay, the 1 minute is more like it. Okay, ladies and gentlemen, it's basically what it is, right? But it's not always going to work for you either. But as you can see right here, here's the 1 minute. There's your 16 pips right here. Gave the gap, went up. There's 16 pips. But look at these two right here. They're fake outs. So you got to be careful. If you're just scalping for 5 to 10 pips, hey, you can do it. I'd rather do it on a bigger time frame and wait for the pullback. But anyway, not much to say on the yen today. Let's take a look at gold. Oh, there they go. They're sinking the gold back down again. Sink, sink, sink. Okay, so anyway, let's go look back in time from where we left off the other day. So as you can see, right here, okay, just draw a continuation, I guess, like this. I wouldn't have took this trade here. It's near the end of the day. Okay, but right here, ladies and gentlemen, we broke through all the resistance right up through here, came back, pulled back. You would have bought it right here. and up it went, 86 pips. Gold is about one of the best things to trade these days because it has, continuation flow where the other things don't. They just stop and turn and they go the other way. There's trends, it moves a little bit. Next trade would have been here that day, and I wouldn't have took it because you already won on the long side. Okay? You don't want to take it either. It's too close to the end of the day. Well, then they did a buy fake here, and I wouldn't have done this trade either because it did not clear through here. They sold it off of there. And then they took it down to here, okay, and then they bought it off of there. So let me put the lines on so you understand not to do these trades. You need for it to pierce up through here and probably through here also and pull back down, then you buy it. But because it went up to there and did not go any further, you would have not sold in here, okay? Then when price came down, okay, it did not, and I repeat, it did not really pierce down there enough to say, okay, we can sell it, right? And it came back up, and look what they did. They bought again off of there, and then they took it up to here again. See, it's just one big buy off support, sell off resistance crap in here. And that's what they did. And why they did that? Well, it was because there was longs getting out at the higher price and there were sellers getting out at the lower price. Why were they all getting out? They were going on the sidelines because they did not know what FOMC was going to say. Okay? And FOMC is just as big, if not bigger, than non-farm payroll. There's a lot of people that don't realize that. And they get caught on the wrong side. They're in a trade before it and don't realize it. And nothing really happened on FOMC yesterday. Did this little spike here. Okay, 55 pips. I actually did this trade here. I bought it right here. And I got out somewhere up here. I got about 40 pips out of it. Should have held on and took it up to there, but I didn't. But anyway, it was a good trade. Got 40 pips. So anyway, if you would have done this trade, you would have got in like right here, and your potential was 82 pips to the top. Then we got a sell trade here, and it was legit. It was a legitimate snagger trade right here. Because it broke through the support. You would have got in right here, and there's not enough gap here to qualify to get out. So if you're still in it short, you're making 26 pips. Went down 41 pips so far on this trade. So anyway, that's it. Once again, this is Jason Sweezy here from Forex Snagger 2.0. I hope you enjoyed the video today. If you haven't picked up your copy, please click on the link below this video and pick up your copy so you can start making pips today also. Have a great day. We'll see you next week on Tuesday for the next Snagger 2.0 video.